We just made over 300% profit shorting Fortinet stock because it crashed down after earnings. A lot of people are asking us if we're closing the trade to take profits or staying in for more gains. The answer is both. Most traders think you have to choose one or the other, but the pros know how to do both, so you don't have to choose. It's one of the smartest ways to trade. If you've ever been in a winning trade and didn't know whether to close it or ride it, you face the same decision with this problem. Close too soon and you leave money on the table. Hold too long and profits can vanish. So in this video, we'll show you exactly how to lock in profits and keep the trade alive, so you never have to choose between cashing out and missing out. If you're subscribed to our channel, you'll know that we posted a video on Fortinet stock analyzing an unusual trade we detected on this day, August 1, before the stock fell significantly after reporting earnings. This was the video that we shared on our channel just a few days ago before earnings were released. We analyzed a 3.4 million options trade to help determine whether to buy or sell Fortinet stock before earnings. And after analyzing the data, it was clearly flashing a sell signal, indicating a potential stock crash coming. So we entered our put options trade, going short and bearish, following the trades of a wealthy investor whose activity stood out. And as it turns out, that analysis was correct and highly profitable, because Fortinet stock has dropped hard and is now much lower, so that trade has paid off big. If you want to learn how we predicted this stock crash, we'll link this video at the top. Make sure to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, keep in mind, even if you're subscribed to our channel, you could still miss out on these profitable trades. That's because we don't always have time to make a video. We spend most of our time analyzing data for the exclusive trades we share inside our membership. That's why we use email alerts. They're the fastest way to share trades, even when there's no video. So if you want to start getting more profitable trade ideas like this, sign up for our free newsletter on our website. We'll put a link here. It's simple, quick, takes less than a minute, and best of all, it's completely free. No credit card, no paywall, just raw data-driven trade alerts based on unusual option activity, emailed straight to your inbox. And if you want full access to all our trade alerts, including real-time updates, detailed analysis, and earlier entries, consider joining the membership. You'll get direct access to the trades of wealthy investors and potential insiders, so you can see what the smart money is doing before the trade becomes highly profitable. Now, how much profit did we actually make from this trade? Understanding the size of that profit is important because it's what led us to get the best of both worlds, closing our trade to take profits, but then opening a new trade to stay in so we don't miss out on more gains. And so, if we had simply shorted the stock by using shares on the day we entered our trade, we'd be looking at about a 23% gain from our entry. But since we used put options instead of just selling shares, our profits were even higher, thanks to the leverage that options provide to amplify returns, capturing even bigger gains. And so, let's take a look back at our original trade, analyzing the same options that a wealthy investor was trading as well. It was for these September 19th options at the 95 strike puts, and it was initially priced at $4.95 per contract when we entered the trade. Keep in mind, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100, since each option contract controls 100 shares of stock. That means each option contract costs $495. So we can see here on the risk profile graph where the profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already factors in the cost of the trade. That's why you can see on the blue line that if the stock had gone up, it would have been a negative $495 loss per contract. But since it went down to about $74 per share, we have a profit of $1,578 per contract. And so, to calculate the profit percentage, we take the profit of $1,578 and divide it by the initial cost of $495 and then multiply by 100 to express it as a percentage, and that gives us a return of 318% profit. In other words, we more than tripled our original investment on this trade. And so, this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where money flows gives us deep insights into potential stock moves in the market. The rich often have better access to information, sometimes even leaked insider information, that help them make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, if you want to get access to deep insights like this, head over to our website. We'll put a link up here where you can see exactly when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. That's why we do not follow just any wealthy investor. We track the smart ones who are highly strategic. Because as long as we use strategies with a better risk to reward setup to maximize profits and minimize losses, then we can stay consistently profitable over the long run. And so, as a real-time example, let's go over how we updated this trade into a risk-free options strategy with no possible loss while increasing our profit potential. As we can see here on the option chain, for these September 19th options at the 95 strike puts, our options trade is currently worth between the bid price of $2,050 to the ask price of $2,095. And remember, these options were only going for a price of $495 each when we entered this trade. That's why our trade is so profitable now. But here's the key detail. You can see that 5,000 contracts were traded at the volume, so a good portion of the 7,000 open contracts that we initially analyzed. This tells us that this same wealthy investor could be closing out their trade. And that's why we closed our original trade and rolled the put options to a lower strike price, to the 72.5 strike puts. You can see our new position here. POS stands for our position, and the green color indicates a buy position. And so we closed these 95 strike puts by selling them, locking in profits, and we used those gains to buy these 72.5 strike puts, which cost less than the amount we sold the previous position for. That means we entered this new trade at a credit, not a debit, making it a risk-free setup using only profits from our earlier trade. And so, when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same September 19th options at the 95 strike puts. So, we are just left with the 72.5 strike puts that expire September 19th. And so on the graph, you can see that if the stock goes up, our trade would not have any negative loss because we've locked in more profits than the cost of our new trade. This is how we manage risk by minimizing losses, and in this case, we eliminated any possible loss while still staying in the trade to gain more profits if the stock drops further. That's why we never have to choose between cashing out or missing out on winning trades. But remember, this was only possible because we followed that wealthy investor early, back on this day, before the stock crashed. So if you missed our original analysis, we'll link that video here so you can see how we made 318% profit. And the next time you're in a profitable trade, you'll know exactly what to do. For deeper access to our strategies, visit our website. We'll link it here. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.